Morning, market makers. It's Andrew here. I hope you had a good weekend. Today, I'm going to show you a tech stock that is overvalued, overpriced, and is ready to be shorted. In my opinion, this is not financial advice. Do your own due diligence. This is for informational and educational purposes only, and for you to enter a trade is up to you. Nothing to do with me. Okay, so we're going to do some fundamentals first, and then I'll go into the technical analysis. So, on a fundamental basis, the stock market is overpriced, right? The tech stocks are overpriced. Everything's moving up in a straight line, pretty much. If we look at the Nasdaq, we've gone from the March to now, and we just keep going up. Like, it's unrealistic that we just keep going up like this forever. Especially in this current economic climate where there's inflation popping up and the unemployment level is high and all of those kind of things. So there's a lot going on in the stock market where we are definitely due a correction also in the S&P. Like, there's just been no real 10% move. So we are overdue a correction. So from those two fundamental bases, the stock market and tech stocks are both overvalued. I did have a look at a few other stocks to see which one was best to short. I had a look at Tesla. Everyone knows that Michael Burry has shorted this, and he has most likely shorted it around here when it was up at the 800 level. And you can see it's had a nice correction here. It's in a rising wedge. It's most likely going to fall further. But we haven't got an opportunity to short it at its peak, and so I went and looked to see if there was other options. I went and I had a look at Snowflake here, but it's also had a steep correction. This was also overvalued, and it's gone from 426 down to 250, and obviously it's only been recently listed as well. So, and I also had a look at Guidewire. But it's also had a steep correction as well. So this was the March lows, and it's gone up to 134, and now it's down to 115 or 109, and it did have a deep correction down to 90. So that would have been a good trade as well, especially if you had a bit of leverage on it as well. So we've kind of missed those two boats where there was a peak and it's dropped down. Whereas I've had a look at this stock here called ServiceNow, and we are pretty close to our peak here. Very little difference, 556, and the peak was 595 or something like that. So we're still relatively in peak level. It has tried to rally twice over the last few months. So this top happened in February when our stock market was healthier and momentum was healthier, and now it's beginning to slow down. So that's the reason I've chose this stock. Now, this has a PE ratio of over 700, right? And to put that into context, I'm going to just show you a few different companies here that have PE ratios that are unrealistic. Now, everyone knows that Michael Burry has shorted Tesla, and obviously he's a genius, so you should at least pay attention to what the man does. If you haven't watched The Big Short, you should watch it. Christian Bale does a great job of portraying him. This has a PE ratio of 649, right? So ServiceNow has a higher PE ratio than Tesla, and we all know that Tesla is highly overvalued at the moment. So it's worth taking that into consideration. There's also another consideration, which is the price to sales ratio, and the average for the stock market at the moment, or for tech stocks at the moment, is between 4 and 6. ServiceNow has a 15 price to service ratio, so it's double what is considered normal. Again, that shows that it's an overpriced stock. Now, if we had a look at Amazon, just to show what a normal-ish PE ratio is supposed to look like, they're at 68, so it's not totally unrealistic. That they're worth that much. Whereas if Amazon's P ratio was at 700, I'd also be telling you that it's overvalued and it's worth shorting. So we can also look at maybe like Apple. Oh, sorry, it's lagging here. We can also look at Apple just for the sake of it. See, P ratio 32, reasonable. You know, not 730, not 639, no silly stuff, right? So, just from a fundamental basis, these stocks that I've shown you should be shorted, right? Tesla, Guidewire, Snowflake, ServiceNow, all should have been shorted. And, you know, some people are still currently in this trade, like Michael Berry is still in this Tesla trade. But he got in at the peak, we didn't, so we lose out on the easy money, right? So I'm going to show you the technical analysis now of ServiceNow for the reasons why it's a good time to do it right now rather than wait. So you can see here we've had a peak on this is the money flow index, right, which is a volume and price weighted RSI, and you can see here we hit peak volume and price action in an oversold area right here, and you also see it on the momentum chart, which this is the CMO chart, the Chonde Momentum Oscillator. So you see here that the indicator, the oscillators are going in a downward direction. Hold on, there we are. We're going down. We're going down. Hold on. Just to give it a rough idea. And price is going up. So that shows you that there's big bearish divergence here. That things are unrealistic, right? You can also see here, right at the peak, they're showing the momentum oscillator showing you that we were sliding down, and we had a correction, right? So we slid down, had a correction. Well, now price has moved up. Our momentum oscillator has moved up past this peak in price. And so that is also a continuation pattern of bearish divergence. So we grab here, oscillators up, price is down, and that is bearish. So we've got two different bearish divergences in play right now. We've been in this range for months. So we've been here since August, and we've pulled all the way up here, then we corrected back down, we've gone up and down and up. We've hit range value area high, then to range value area low for the last few months. Okay, nearly a year actually. I keep forgetting how time flies. So it's been nearly a year ranging in this area without having a proper correction down. So we are at a peak level here, and I think it's a great opportunity to short it. You can also see on the volume sticks here that there was more positive volume along these areas here, right, as we're rising up, and now we're switching into more negative volume all along here. So the bears are starting to take control of the price action. We also have on our Fibonacci levels here, so let me just pull them up. So on our Fibonacci levels, where I've pulled from low to high in March, so there's the fib pull there. So the March lows to the February highs. You can see that we're still holding the 382 level here. And for those that don't know, if you lose this 382 level on an upward movement, then a correction is gonna roll at least down to the 618 and the 66, right, which is 377 to 362. So if we start to lose this level and it starts to act as resistance, then eventually we are going to roll down to at least 377, 362 area. So that would be a move of what are we doing? About a 35, 30, about 30% move from where we are right now. Okay, so there is room here for a move to the downside. We've gone up, we've come down, we've gone up. So going down is most likely, especially when you include all these bearish divergences. When you include that the stock market is overvalued, when you include that their PE ratio is 700 plus, when you include that their price to sales earning ratio is 15, when the normal is between 4 and 6. So there is a lot of reasons, and we're also overdue a stock market correction of at least 10%. So you are overdue on this stock, and so I have already entered a short for today's open, and I'll give you the take profit points that I am taking. So the first one, if you want to be safe, it all depends on how you want to play this. If you want to play for a more longer term view, then you would maybe take profit lower. But if you want to take steady incremental profit taking, then I would start off with the 484 level, which is the range point of control. So the price could move down here, bounce and try again, right? That's a possibility. I don't think it's gonna happen, but it's a possibility. So if you want to take a nice profit down here, we'll have a 15% move, which is great, right? That's a great move. There's plenty of profit to be made there. So if you just want to be careful, you could take a sizable profit take from there, right? Then the next level for me will be the 461, which is the range value area low, which we've bounced from twice on 2 corrections. So that would be a good place in case it bounces up and tries again, right? These are all logical, right? So we could take profit here, take a profit here. Then the next level for me would be the 428, and also these line up, right? This lines up with the 382 level, so you should see a bounce, right? You've had 2 bounces previously, right? And you've fallen a little further on the second time. So logic would say that you should get a little bounce when you hit this 382 level. So we'll take some profit at 461, right? Then I'm gonna come down here and take profit at 428. This is a weekly resistance level, and you can see there's some support along here on the price action, right? So I would also recommend take profit at 428, and then a final take profit at 376. Okay, and the 376 area is the 618 area where price usually falls to. So if it loses this 382 level, it is most likely going to try and get a bounce at the 618. And so I'd also take profit at the 376 level. And then you could leave maybe like 10% of the overall move left and let it ride and see if it'll go lower, which it probably could. Now it is probably due a correction, maybe down a lot lower, maybe in the 298 area, or you know, there's a whole range of possibilities. But for these initial moves down, the take profit margins, or the take profit points, are 484, 461, 428 and 376, and they are all logically based, not just random. So those are those are the arguments for shorting this stock. Thank you for watching. I appreciate the time it took to run through this. I appreciate your time. I'll see you again on the next one. Happy shorting.